Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all as promised around 3 p.m. And today I want to talk to you about specifically Zomato, but there are other companies that I'll talk about with respect to their earnings and whether one should invest into those types of companies or not. So that would be the major discussion that I'll be doing. Apart from that, I'll talk about the markets as well and will definitely answer your queries as well. Good afternoon, Mr. Pawar. So it's a Thursday afternoon. I'm not expecting a lot of members or people to be online. So we'll spend about 2-3 minutes talking about the markets, and then we'll get this session started in earnest by talking about specific companies as well as a niche sector in which people really want to get into, but why they should not buy into it. We'll discuss about that as well. So very good afternoon, and I hope your investment and trading is going pretty well, and the markets, the way they have behaved over the last, you can say, 1 month or so, it looks like that it's headed towards 18,000, but it seldom happens like that. But the market is very cheerful, as expected. As I said, that July would be big. Normally, July has always been a very good month for investors. This time around, also, it seems like July will end up being one of the best recent months, and August has always been very difficult. And over the last 10-11 years, I have seen, apart from the post pandemic year in 2020, during the pandemic year it was pretty good, but otherwise August is always either very sluggish or bad as an overall series. So really looking forward to August, and it seems like the way things are panning out, we could see a decent decline in the August series as well. Uh, let's begin the session by talking about the markets per se. Hopefully, more people will join in during the conversation during the course of this live session. So, about the market, 16,700 or so is on the board at the moment, and it seems like the market is tiring at the upper end uh, of everything. 16,950 right now the market is. So it's closing in on 17,000. Now I'm very skeptical on the market from here on in. I believe that there could be a decent fall that could await us once we say get past 17,000. Very difficult region would be around 17,200 to 50. So I feel that around 17,000, around current levels, if you are making good amount of profits and if you are doing fine, I think it's time to probably book profits and wait in cash for a decent decline in market. I see a 7-8% decline in the Nifty, which could head towards 15,200, 300. And if things go awry with respect to the global front and the news flow and etc., we could go down further. Now, one thing is that the market might not fall because of one reason, and that is that the way the Fed has hiked yesterday, uh, 75 basis points, and they have talked about the fact that there will not be such huge, you can say, hikes going forward. So it seems like we are peaking on the rate front. Yes, we will have another 75 basis points over the next 3 quarters. So next three meetings of 50, 25, something like that. So 23, three, you can say hikes of 25 or 150 and 125. We'll see that, but another 75 basis points await us, which is not very big, and that is probably why the market is extremely cheerful. And this is where I feel that IT might have bottomed out about a month back, and now there will be some consolidation over the next 2 months, and then a big move from end of September till the end of the year. So that's what I feel on IT and most of the pharma counters, because it seems like that the US economy may come back uh, to its track by October, November or so, or by at least by the end of the year or so. So this is the texture of the market. Indian centric stock, domestic stocks have been doing extremely well. You look at cement stocks, metal stocks, You look at consumer stocks, many consumer stocks are doing well, some are not because of the results, but something like a DMart, we are seeing the kind of move it is showing. We have Britannia and other sorts of, you can say, FMCG companies are doing well, and there are other consumer centric companies that are performing well. We have had results of Jubilant Foodworks, which is pretty good, and the market did well. So it looks like 17,000 is awaits us by tomorrow or so, but from next week onwards, I have a feeling that we might either will fall 10-12% in a month, or we might not fall but will not go anywhere, and we could be in this range of 16,400, 500 to 17,000, something like that. But basically what I'm trying to say here is that the mid cap index and the small cap index and some of the stocks that you'll be holding may go down further. So we have seen what happened with VIP, top class results, everything fine, and the stock is down 3-4%. Now this is a phase where now these things will happen, a complete reverse of what used to happen a year ago, or 18 months ago, when bad results came in and the stock market went up and the stocks went up. But here even top class results are seeing a lot of selling in stocks. So we could be in a situation for about a couple of months, not that for long, but I feel for about couple of months we could be in a situation where we'll see that the market might be a sluggish to on a downward trend. So taking that into account, if you are making good amount of money in these stocks, in these sectors, say consumer centric metals, etc., it's better to book profits in there. Even some defense stocks have done well, so it's better to book profits in there rather than waiting for further moves or further up moves. If you have a trading mindset, if you have a mindset of you can say holding on to the stock for the next 3-4 years, like I am having with my stocks, then it's better to just hold on and get ready for a decline in August and early September, and then things should be fine from October onward. So that's the call uh, about the markets. Now coming back to the point of Zomato. So basically, what I wanted to talk to you about is not specifically Zomato, but what I feel is that many companies got listed over the last 1 year, and at least 70-80% of them were uh, of in a region where you can say that, as per me, I would not invest into them. But there have been 20-30 companies, or 20-30% of the listed companies which are pretty good, and people should be looking to invest into them. Now where is the demarcation? In my opinion, the demarcation lies in the kind of profitability the company does. So basically, a Zomato which is having spiraling losses, I will not invest into it even at 42-43 rupees, until and unless some profitability comes around, and there is, you can say, some revival in the numbers. The way the numbers are panning out, sales are increasing but profits are increasing as well. That means they have a problem of debt, they have a problem of high raw material cost, and probably selling their products at a lower price, even though they sell it at a higher price compared to buying from the restaurant. So there are a lot of charges. So the business per se, or the business model per se, is questioned here, and so the stock is around 40 rupees. But not just about Zomato. What I want to say here is that most of the companies which are loss generating, or which are in losses for at least 3 years or more, they are a complete avoid. No matter what happens, do not buy loss making companies, do not get into any loss making company until and unless you really see that the company, or you really have an understanding that the company is going to revive completely. All right, Mr. Pawar, thanks for your contribution. Sigachi results, how is it for 3 years? See, results are pretty good. Uh, I'm convinced with the results, although I don't know what the markets wanted, but 43% profit growth, around 30% sales growth is pretty good in this sort of an environment, because remember that they also have exposure globally. So the stock is around 245 at the moment, and if I annualize the returns, or somewhere I calculate the EPS, it comes out to be closer to 18 rupees by FY24, FY23. So on basis of that, on the basis and on the fact of that it could be around 17 and a half rupees or so, I think things are looking pretty good at 17 and a half rupee. We are looking at 15, 16 times, around 16, 17 times earnings as the stock may be. And uh, around 17 times is pretty interestingly priced, that Sigachi is. But what is the biggest trigger here is that by FY24, 23 December, so sorry, 22 December, so by 23 March onwards, there'll be a new facility that will come on stream. So the expansion would come on stream that will generate a lot of revenue. So eventually revenue will expand by FY24. So I believe that from a 2 year perspective, it's a very good stock around here at 240 rupees or so. I think 700 is a possibility over the next 2 3 years. I'm not saying it can happen, but the stock looks good, the company looks good. It should be re-rated. If it is re-rated, then we are looking at 700 over that period. Okay. So as I was talking about that, not to buy into loss-making businesses, or any business that is profitable but not that big, and trading at enormous, you can say, PE or valuations. Unless, so a case in point here is DMart. So I'm not saying you sell DMart just because it's trading at 200 times, 160, 150 times earnings. You remember that DMart is growing at 40 to 50% CAGR on the bottom line. So that's why it is, I mean, it is exorbitantly priced, but it is not a stock to sell or not to buy. I mean, the stocks not to buy are those that are making losses on the bottom line, because if they continue to do so, then the stock price will only go one way, and that is down. And so be very careful about it. Having said that, there are companies in the consumer segments, and there are companies in other sectors which can come up with 1 or 2 quarter of losses and yet have very good results going forward. So you have to be stock specific and understand about business as well before buying into it. In case of Zomato, the business model per se is flawed, and it's extremely difficult for such a business to make money, and hence, as it's making losses, I won't be looking to buy into it. All right, guys, thank you. I'll be ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel, that will help you ask me questions and eke out answers in greater detail. Mr. Pawar, thanks for your contribution again. How about KPIT results unable to cross 540? Well, again, results are very good. It's very difficult to understand as to what the market wants, because it was trading at around 80 times just a few months back. It's trading at 52, 53 times. Even less than that, if I analyze the returns and go say 1 year forward prices, then EPS could be around 13, 13 and a half rupees. It's trading at 40 times only 1 year forward number. So quite possible that the stock might consolidate, but eventually by the end of the year, the stock should do well. I think in KPIT, I see 700, 750 do come in a year's time or so. I think that if the results continue, if the results are bad even for 1 or 2 quarters, it would be extremely difficult for anyone to make money in there. Should we add a DMart and Titan at current market price, or wait for some, say, a decline I expect in August? So probably wait for 3 weeks. Let's see how the market settle down. If you get chances to buy around 15,800, then these stocks would have fallen, and that's where you can probably accumulate, Mr. Pawar, that something like that can be bought. If I say that you buy now, then there could be a situation where DMart could very well go to 3600, and you might not have the money to buy it. So uh, be stock specific, analyze these companies, and then take a call on them. See, Tata Motors bad results. See, it is one of the stock, and if you look at my video on Tata Motors, I made at least 2 3 videos over the last 3 4 years. I believe that you don't buy into businesses. The second thing is that, again, a loss making business Tata Motors is currently, but you don't buy into businesses which are uh, extremely diversified. There are businesses which are diversified, but at the moment, for Tata Motors, I believe that the business is over diversified, and they will have one problem or the other because of their expansion into global, you can say, regions. So that's why the stock is down, heavy losses that have come in. Okay. So Vanke's is a good stock to buy, but again, it's a dark horse kind of a company which can do well once, you can say, the market per se end up doing well. So I believe that Venky's is a hold for the winter season, and it should perform during that. It's kind of a seasonal kind of a stock that you're talking about. Okay. See, these things do keep happening if you print a lot. When you talk about global recession, be kind. These things keep on happening, and one should understand that when you print a lot during the pandemic, you print a lot of money. Eventually, that's going to bite you back, and that is what has exactly happened. It's not. I don't think it's a classic sort of a recession globally. It's a fact that they had a lot of surplus capital in terms of projects that got executed, and eventually a lot of money got printed. Everybody had a lot of money, and the stock market went up, and now these things are reversing. So the markets had to correct, and that is exactly what has transpired. Okay. Redkin, I won't be able to discuss about it, so I'm not looked at it, so I won't be able to discuss about. FL Danish looks good at these levels. One can accumulate 3 year time frame, 2000 possible on FL. I believe it can perform. DV's lab now is a buy with a stop loss of 4000. Next target is 5050, 100 on DV's lab. Keep a stop loss at 4040 or so. So that's a call on DV's. Loris is a buy. Yes, numbers look good. Loris at these levels. Probably it has had 2 good days. Probably wait for second half of tomorrow to buy into Loris. It should fall from tomorrow afternoon also a little bit. It can fall, and that is where you can probably accumulate something like Loris. See, I am not in favor of buying any, you can say, chemical company. In that regard, I think what you need to do is buy into top quality companies like Naveen Fluorine or SRF, etc., and hold them for 2 3 year period for decent enough returns. I think Loris Labs results are fine. Not that it's very good, but not bad either. It's fine. The margins have expanded, which is pretty good. But I'm disappointed with the kind of profitability the company has come out with. Hopefully, going forward, what the market thinks is that the bad is over, and things will only look upwards going forward from here. Okay. What else? So Aster DM I have not looked at, won't be able to comment on it. Whatever stocks I am going to talk about is I have either taken trade earlier of it, or have analyzed those companies and all. See, Colgate is having other issues with raw material and supply side issues and many other problems, and that's why the stock fell. But it's a very good long term gem in terms of, you can say, dividend, etc. But Colgate per se, you cannot buy such a liquid stock as a trade. So Parag Kilpest positive on it. Yes, the management has done a kind of a flip flop with whatever you have that NCLT order, etc. But I'm waiting for the June quarter numbers, and it would be interesting to see that minus the pandemic, how the numbers ends up. So that will be very interesting to see. So Kilpeth probably is falling because there is no clarity on the demerger thing. That would be one reason, but the volumes are extremely thin. So I'm holding on to the stock. That's a disclaimer, and probably I think it's a very long term good pick, but not for short term, not for trades. You can make losses. The stock could go all the way to 270 and even 230 after that. So Gillette is a long term buy, something that you can buy from a 3 to 5 year perspective. Positive on KEI, the stock has fallen. Probably you buy around September, October. It should reward you with a 15-20% upside. The results were pretty good. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.